Okay, welcome to Pricing in the News. This is our segment to go through pricing related headlines with our subject matter experts and talk about learnings, implications, and general commentary that we think would be valuable for business leaders for things that have been happening in the news in the last couple of weeks and months. So a lot of these things, there's been, I would say, like a big, at least in my experience in going through these different outlets, there's been an especially large burst about AI in the last couple of weeks. So I thought our starting place could be Rizz GPT. So this is Stanford University students that created augmented reality glasses that provide conversation prompts on the fly. They give you witty or interesting responses to questions in real time. And I also learned that Rizz is a term for charisma, which is like kind of in reference to people that have a certain kind of personality. So the idea is like, first of all, this is a result of OpenAI kind of opening their plugins and APIs to the public so companies can refine GPT for their stuff. And then there's also, this is kind of an example of how fast people are innovating with AI given what's happening with GPT. So we've got people on all ends of the spectrum here. I don't even know where to start with this one.
Yeah, I think it's exciting. I mean, it's a really exciting world that we live in because you've got this technology and we have this technology, but we don't really understand the usage of the technology. So it's kind of a wild, wild west where everybody is kind of inventing and figuring out all these different uses. And it reminds me back in the day with the internet, I'm going to date myself here, of when we started with the internet, a lot of people didn't know how best to use it, right? Even PCs, we didn't really know how best to use it. We started using it for specific use cases, but there was lots of quote unquote frivolous things that we started with as use cases. But in order to kind of get to those important value-based applications, you kind of have to go through this understanding of this technology by applying it to different scenarios just to see what works, what doesn't work, and you learn from it and you get better. So in my opinion, this technology is going to formulate a normal life cycle. We're kind of in bleeding edge in the beginning of the life cycle. People are coming in from everywhere, creating these different corner cases, use cases of this technology. And they're going to learn from it. They're going to get better. They're going to get smarter. ChatGPT is going to get better and smarter. And you're going to have much better value-based applications in the future when the market can accept it. We do have to understand this is typically our markets are very efficient. So it will kind of go through and parse out what it finds valuable and what it doesn't. So some of these use cases, I think, are a little tongue-in-cheek and they're fun in this early stages, and we'll see what happens in the future.
Yeah.
Charisma as a service.
Yeah.
That's right. Charisma as a service. Yeah, I would just guess that the Google Glass sort of reincarnation, like they kind of attempted this in, I don't know, 15 years ago or 10 years ago, whatever it was. And it didn't really catch on, just like wearables in general haven't really caught on, beyond the Apple Watch in a huge way. But I do think the experimentation is interesting. I think whether it comes through, glasses where everybody knows you're sort of using this charisma as a service, it's kind of like maybe that's its own cachet or kind of its own weird thing where maybe you wouldn't wear that in a job interview, but like the access to that sort of information, maybe in practicing for that interview or kind of thinking about what's interesting to talk about at this party, like maybe that'll be the more, I don't know, the enduring use case, whereas like this particular piece of hardware doesn't really matter if it goes somewhere.
First reaction to this is, seems a little creepy, seems a little weird, but I think that the exploration is valuable. Nobody, like Pete and G were saying, nobody knows exactly how this is going to be used over time. But if there is something there, this is a good way to test it out. So, I mean, I like the concept of the experimentation for sure. Whether or not this is going to stick, if I had to bet on it, probably unlikely, but certainly interesting to see what happens.
Yeah, I think API is probably the big piece, right? It's like just having the access to all these different channels and vehicles of like how you can access AI and the use cases. It's like we're scratching the surface.
Yeah, I'm just jealous that I didn't have it when I was single, and I could have gotten a few more. Yeah.
It's funny because I was thinking about GDPR And like, at what point will we tip into regulations and starting to, like, when people cross lines, or I don't know exactly when we'll get to that point, but we're kind of in like this very interesting wide open space right now where people can test and try things out, and everything is kind of like, ooh, especially if you fit into the early adopter kind of vibe. That's exciting. It's exciting.
Yeah, it's a really important point, right? Typically, government regulations don't come in until you either see somebody from a safety perspective, get harmed, or you see a lot of cash flow. It's kind of like the cigarettes and the weed and marijuana and all these other laws. Once you start seeing a lot of cash flow, then all of a sudden the government's very interested in regulating, meaning taxing and all this stuff. Just like, like I was saying with the internet, I remember, back in the day, the big question was taxes. Where, if a company is registered in Delaware, but they're selling into Seattle, who pays the taxes? And I think you're going to get there as soon as some of these things catch on. Not the Stanford product probably, but if there are other products, other use cases that catch on and they're making 500 million, 400 million, whatever the number is, I have a feeling that's when ears are going to get perked up and people are going to go, hey, there might be an opportunity to do this or that if we regulate it this way or that way.
With the one of the other articles that I think Adnan sent was Reddit is going to start charging for access to its API. And it feels to me, it seemed like potentially this was connected to them preparing for their IPO in the coming months. But the CEO said companies that crawl Reddit for data and don't return any of that value to users will have to pay up. We think that's fair. And I'm like, yeah, I think that's fair too. But it's funny, like, especially as they started to talk about, just in this example, the CEO said, we don't need to give all of the value to some of the largest companies in the world for free. And when you start to think about big companies and profitability, and you've got that kind of coming in convergence with people trying to innovate and make things better, it's just interesting to see what kind of trends are going to pop up, like how to monetize that type of thing.
This one's super interesting. And, it's following the trend where Twitter changed the pricing model for access to its API. So, these companies have this treasure trove of data that is user generated. And the historical draw to the platform has been that one user posts something, another user finds that interesting, they react, there's comments, there's interaction, and then that starts to exponentially grow as the company scales to bring in people. And now that's transforming because there's these third-party type of services such as ChatGPT that could be using data from Reddit, Twitter, etc. to power themselves. And without that data, these other services aren't nearly as valuable. So the statement certainly seems fair that we've built up this data, and for a third-party company to access it, then we want a cut of that, because the third-party company is in essence monetizing somebody else's data. So I just find it really interesting. I mean, I think companies are monetizing their data. They're not giving it away for free any longer. And it seems to be in some ways, yes, directly related to their IPO, but also a reaction to the adoption of things like ChatGPT that are tapping into their data.
It's not so dissimilar from, you think about price increases in the market where, if you are in the middle of a price war, it's really hard to get out of it, first of all. But second of all, there needs to be some market leader that says, we're going to reset prices, and then hopefully others follow us so that the market as a whole can be healthier. And I think some of these early movers have a reputation. I think they're trying to set the expectation and establish some sort of precedence that leads to a tipping point where it's normal to monetize data, because now they're sort of the outliers. They're saying, all right, we're going to have to pay for the API, and maybe there's enough other places where these LLMs can get their information from. But at some point, it might be that most of the good sources are requiring some sort of monetization. And then maybe there'll be a differentiation strategy for some of like the more minor players that say you can, have access to our data. And we want that to be, driving all these AI models.
Yeah, I think there is a tie to the AI world, but this conversation has been an open conversation for decades now, ever since we started capturing user-based data. We use it for a lot of predictions. We use it for sort of, propensity to purchase models, things like that. So you have all these data inputs, and it really is, the value chain. What's the value of the final application, and where is the real differential value in all the data inputs you have and the algorithm you use to create insights that you put back out there as a product, right? And in that value chain, what's the key here? Where's the key? And a lot of these people were using this free data that's out there to build these algorithms to get, more intelligent. ChatGPT is unlike anything else, but it's going to get smarter the more data input that you get put into it. And your final application is going to increase in value. So where is the monetization? Where is it going to sit? Is it going to sit in the AI platform, or will it sit in the data input platform, or will it sit in somewhere else? And these people are understanding that their data is valuable. It has a value to it. What is that value is, I think, still a bit unknown, because it's based on the final application of it. If you're using it for research projects, that probably has a little bit lower value from a commercial perspective than if you're using it into a product that's driving $1 billion in revenue. That's a different model, and they should get paid if it's a driving force of that value. Then Reddit should get paid, or Twitter, or anybody else that holds this sort of treasure trove of data, like Adnan pointed out. So I think it's just market being efficient. I think it's great that they're going to test it out. I think the key for them is really going to be able to segment off the use of their data for certain applications or final products, because you don't want to charge $1.99 per month or $200 a month, whatever it might be, when you have a use case that's driving $1 billion worth of revenue. Somebody's going to be paying $10,000 a month for it. And if you just charge $200 or whatever it is, you're probably missing out on a lot. In fact, they should probably hire us to do their pricing.
It's a great point, because I think it's basically what it's doing. It's accelerating the conversation about the value of data. You've always heard this, like, data is valuable, but then it's always, well, what is it valuable for? Do we keep it for ourselves to, train our next decision? That's from an internal perspective, but now there's so many more clear external ways to monetize that data too, through these chatbots. So I feel like that's kind of raising it back to the surface. And then I think, to your point, if you could fence off, okay, well, what's really the crown jewels that we need to keep for ourselves versus what do we want to share more publicly or in a commercial sense? I think, that's going to be a really interesting thing. So it'll be really important to understand what is the right use case and how do you assign a value and therefore a price to these different data lakes.
And the other, Pete, I think you're dead on. And then the other angle to it is also, the insights that it generates, the algorithm or the AI platform, whatever it might be that goes into the productization, there is a spectrum that's there. Maybe all that data input gets you to an output or an insight that's 98% accurate rate. So do you need that? If you remove Twitter or you remove Reddit data, maybe it gets you to 80. So do you really need that extra 18% that's there? Or is 80 good enough with the cheap price or free data that you're calculating, and that's good enough for your final product? So as a platform, you have to kind of understand that piece, or as a productization of it, you have to understand that piece as well to go, do I need to be that exact or perfect? Because they're going to charge $10,000 and I don't want to pay $10,000. I don't think that's good enough for that extra 18%, and I'm out at that point. So Reddit and Twitter and all these guys really need to understand what that tipping point is, again, based on that end scenario. Is it worth that extra 18% of accuracy given those data inputs?
But buy and sell side.
Yeah, that's right.
To that point, that could vary by customer segment, meaning Twitter could be, their data could be incredibly valuable in the consumer retail segment, and Reddit is incredibly valuable for some niche business that is out there. Their pricing model in an ideal state should reflect that. So there's just a lot of variations in where the value is, from what is the value of the algorithm itself versus the value of the data. And then when you get to the value of the data, well, what is the use case for the data and that end monetization model, and how do you create a pricing model and structure that reflects that? So I think we're very much scratching the surface here. And you heard some blowback when Twitter first came out with their API monetization. I think it was like $42,000 a month. And in the higher ed community, they're like, well, there's no way researchers can afford this. But realistically, there likely are businesses that are generating $1 billion+ in revenue where they're like, well, it's a drop in the bucket. We could, we don't necessarily want to pay it, but we will because there's value relative to what we're creating as a result of this data.
Yeah, I think the education market is an interesting one, and I think we can move to the next topic. But usually with innovation, we see sort of a high price tag, and then for certain segments, to your point of none, we see a discount strategy. So government education usually is a segment that offers a little bit more variability to that price. If we remove the government side, because it's a little bit of a different animal, the education side, we all know, like, we grew up in the world where Microsoft was like 90% off, when you're a student, right? And it makes sense to do it that way. And I think I have a feeling, these guys, Twitter and other data sources, will probably offer that type of a deep discount for education, because it doesn't just help. It's not a commercial application, first of all, but it's a research application that improves your understanding of how best to use some of these data sources. And I think from that perspective, it brings value back to Reddit's and Twitter's and other data sources. And they need to kind of understand that and definitely have a strategy for those guys. Otherwise, it's I wouldn't say that it would be a complete strategy without that.
Okay, let's talk about cars. So this is mostly about Tesla, but the Tesla Q1 earning report was less than favorable on profits. So the headline was, Elon Musk is playing the long game. So the idea behind this article, it says, Musk says they're pushing for higher volumes and a, quote, larger fleet, so they can later get profits through autonomy. So this was like a deliberate effort to risk the profits of the company in the short term in order to increase market share so they could get more cars on the road and therefore get more data, which kind of ties back to what we were talking about earlier. But the bigger picture here is autonomous driving. So this is kind of like the shift that we've talked about in a few of these, from the hardware to the software model in some ways, because you've got these big implications on the short term and a tank in profits potentially. So where do we start with this one?
I'll give one thought. I mean, I think at a really high macro level, like on the one side, you think about, okay, Tesla was the electric vehicle maker, more or less, for the world's auto market. And at first they had margins that were far superior to any other internal combustion engine, and they still are, for that matter. But now you have all these other competitors that are, whether they're like a small upstart like Rivian or Polestar, or whether there's something established like GM or Ford, that are coming in. And I think naturally over time the prices for these vehicles are going to have to get more competitive, as more, at least for the Teslas, as more competitors enter. So I think that's kind of one dynamic on that side of the market. And then I think on the other side, with the whole API and data conversation, I think there is potentially a long game where the more vehicles you have out there, the stronger your network effect, and whether you're, autonomous driving, so you're kind of like the robo-taxi supplier for the world, that's one way to look at it. How soon that is. I know in San Francisco, there's robo-taxis driving around now between 10 p.m. and 6 a.m. For half price, and it's like a cheap rate, and they're just very deliberate because there's not much traffic on the road. But you could argue, are we 2 years or 10 years away from that? Ultimately, I think Elon is extremely good about talking and positioning about like the next huge market that effectively maybe supports a higher stock price, even though in the primary business of selling cars, it's sort of like, it's going to get more competitive and profits will be squeezed. So I think it's kind of like giving a good explanation for why it's okay, and investors should still have really high confidence in Tesla.
I think in many ways this could tie back to the conversation we were just having, with the intention being that there's a lot of value in the data, and Elon is creating a pricing strategy to monetize the long-term value of data in a way where he wants to put as many Tesla cars out there as possible so that he can monetize that data in the future. And when I read about this, it felt very similar to a lot of the strategies that we see our clients using in, let's just say, the industrial or manufacturing sector. They have a hardware base that they know is valuable and can help their customers run their operations effectively. In order to get their hardware base out there, they will sell it at a price that they may not fully be comfortable with, that is often below some of the targets that they have, with the intention being that they know these pieces of hardware have to be serviced over time. So in essence, what they're doing is taking a bet on the lifetime value, that there is significant lifetime value out there. And in order to monetize that lifetime value, our strategy is going to be to get as much of our base out there so that we can do exactly that in the future. Instead of the hardware being out there, is really just that data that they want to capture.
The fleet. The other thing I forgot to say is this included a lot of price cuts for Teslas. That was kind of it happened a few times, at least in the last couple of months, from what I could tell.
So I think GM's doing the right thing here, first of all, to put everything on their software, because if you had Google or Android, then the data goes back to them, and then Google has control or has that value in the value chain that we talked about, right? So from just the article perspective, I think GM's doing the right thing. It needs to be on their proprietary software so they can have more control over the data that we're talking about on all the vehicle that's going out there. The other thing is
about cutting off access to CarPlay.
Yeah, because they're going to put it on their own. That's why Tesla has their own software base, right? The whole reason Tesla's doing this is not because Tesla can easily go into Apple Play or whatever. It's they want everything on their software platform. They get all visibility and control on the data of everything that driver does or the car does. So I think this is like an industry that's at the edge of everything we've talked about in probably 90% of these roundtables. So there's microtransactions, there's the CapEx to OpEx, there's value, there's data, there's all this stuff that we're talking about all in one industry, one point in time where it's about to drop. And I'm in the middle of looking for a car. So I'm like searching all these different electric vehicles, and I'm kind of like, you guys know me, I have a spreadsheet. I put all the cars and all the metrics that are important to me, and I'm doing a scoring to try to figure out, the best car for me. So anyway, so as I'm going through, one of the things I noticed is Volvo as an example. By the way, Polestar is a part of the Volvo family. So Volvo is doing, you can buy a Volvo, the electric Volvo, CX40 and CX90 that's coming out today or this year. You can lease it, or you can subscribe to it. So there's a subscription that Volvo is leading with. So they had interviewed Volvo, and they talked about how they're pushing people to leasing, which is part of the subscription. So you basically go out and you buy a car, you get a car, you pay one price. That price includes insurance, it includes everything. And you drive for as many months as you want, minimum 4 months. Then after that, you can turn it back in, and on the 5th month, you can get a new car, you can upgrade a car, you can downgrade, you can do whatever you want. And the whole concept is they don't want to sell cars anymore because they want to own that asset for 12 years. That's the period that they want to own it for. And they want to move to the subscription model where they have a reoccurring revenue for everything that we use on that car. So think about that for a second. That basically turns them from a car company to a software company. It turns them into a reoccurring revenue. Their valuation goes through the roof, and all of those things, that's what they're trying to get in front of. And now there's a mad dash because Volvo is kind of getting closer to the front. You've got the Tesla that's already there. You've got all the BMWs coming out with all their vehicles now. And it is a mad dash to get as many of their cars, their software platform on the roads as quickly as possible. And whoever gets the most or gets a very big portion of the market is going to be the leader in this turn from CapEx to OpEx, and their valuation and stock price is going to go through the roof. So this is a lot of fun to sit and watch and even be part of it. I'm actually looking at the subscription model as something that I'd be interested in because there's a car that I really want that doesn't come out till next year. So I'm like, oh, maybe I'll try the subscription, for a few months and see how it goes. I don't know.
Interesting.
I'll be the guinea pig for us, for the round table.
Exactly. It's important. It's research.
That's right. That's right.
It's an interesting model because over the course of that transition, it feels like there's a bit of friction being created. So like in GM's specific case, where they're removing CarPlay and Android Auto, there's blowback because people are like, well, I love the luxury of having this seamless interface between the car and my phone. I'm very used to it. It's not really much of a learning curve. And, you know, historically, at least in my experience, some of these platforms that the auto manufacturers put in place, it's just not quite as friendly. It doesn't integrate well. It's like, how do I set up this app? And it's just, again, very, very seamless when you put this in. But if they can address those things where, you know, you get in your car and Spotify works with relative ease, et cetera, then perhaps there's a play. Because I don't know that there would be a lot of blowback if it worked, say, close to as well. I think consumers would generally be just fine, which, you know, I think that's often the case with Tesla, where they don't have that fully integrated, but it works and people move on because they have the ability to conduct voice command. They have the ability to play the music that they would in their phone with relative ease. Maybe not exactly the same, but close enough.
Yeah, I don't know, to your point, Adnan, if CarPlay or whatever ranks as one of the top features that is a determined feature for purchase. I don't know if it's that high, to your point. I think it's a little bit lower. It's more of a nice to have because the market's already trained by Tesla and others to be on a more neutral platform. Yeah.
It'd be interesting to see what other industries, like where this comes to life next in terms of just the push for getting the fleet as many as possible and the willingness to drop for the short-term stuff just for a longer-term vision. And it seems like we've seen that with a number of our clients kind of moving in that direction, and see who moves the fastest.
Yeah, I think the low-hanging fruit is really the heavy capital. If you're selling heavy capital, I think that's probably a low-hanging fruit to start thinking about. You know, can you lease that capital? Can you make it on a usage basis for your customers? You know, what can you do to make it more variable rather than them having to put it on their balance sheet?
Yeah, lots to think about. I think it's a good place to pause because we got a lot. There's a lot.
Yeah.
All right, thank you guys. I appreciate it.
Thanks. Bye.
Next time.